Ladies and gentlemen, welcome to the Responsibles. I'm not, we're going to keep doing that for a while.
No, it doesn't sound good. It doesn't sound good coming out of the mouth. The alphabet doesn't sound bad. We also didn't get like a little countdown there on the back end for the live stream. I feel like normally it's like 3, 2, no, yeah. What's up, everybody?
I jumped right in.
Start over. It's ruined. No, I'm just kidding.
Ladies and with me is the great and powerful Brad Freeman and the stunning, faceless, but me and Brad might know what he looks like. And handsome chap. Evan, Stock Market News. How you guys doing?
What is up? I am excited. I love doing this stream every single week. I know we were kind of talking about some of the stories that were going on before this. The Waymo stuff. Waymo Tesla is going to be a really interesting conversation here. Hims, a couple others. I'm doing good. It's summer. It's hot. Excited to talk. Brad, how are you doing? That's a disgusting shirt you have on, but I'll let it go.
Thank you. Yeah, I wore it for you. But it was 98 degrees in Michigan earlier today and humid. So channeling the inner, lived in Florida for a few years to try to survive this gross heat. But hopefully it dies down, and I'll stop talking about irrelevant stuff now, and we can get to stocks.
Do we want to start with Hims drama?
I think so. I think we should get right into that.
Why don't you explain it, Brad? Because I'm very much on the outside of this sector.
Yeah. So basically, Novo and the Wegovy drug, they had a partnership with Hims, where there was some leeway on Hims being allowed to personalize medications. Someone needs a different dose. Someone wants an active ingredient taken out to minimize side effects. Someone wants a vitamin added to it, or multiple medications in one form factor. There's a legal gray area there that allows Hims to kind of offer that, despite the fact that there are exclusivity periods for these biotech companies where, because they're spending so much money on medicine that's theoretically supposed to help the human population, there are supposed to be exclusivity periods where they have patents that are protected that prevent competition from entering the field before generics and knockoffs and copycats can kind of come along and create other products. Just to make sure that these companies feel more confident and comfortable in spending the large sums of money that they need to spend in order to create drugs for weight loss and hopefully cancer and things like that in the future. So there was a partnership between the two. It ended pretty abruptly after 1 month. Was it yesterday? I think it was yesterday because it's Tuesday, where Novo came out saying Hims is being a little bit aggressive in what they're considering. In what they are in which patients they're deeming in need of personalized medications, steering people more towards that option instead of their wholesale Wegovy option on the site, which is more expensive.
What I'm showing right now, this is what came out now. The Hims CEO saying they won't back down, but it had some of the stuff about what happened before is why I'm showing it. But you can read through that as you're talking. Sorry.
Yeah, for sure. I kind of lost my train of thought there for a second. Do you guys remember what I was just talking about?
You were talking about No, yeah, this guy. I thought so. What it was around this deceptive marketing, personalization was what they got called out for. They have Novo has other deals with other of these online telehealth ones, but they were called out specifically, and it seemed to be that personalization.
Yeah, and the tricky thing for Hims and these other companies, well, especially for Hims, is the personalized options that they are the copycats, for lack of a better term, that they're selling. They are lower priced, so much better for top of funnel growth. And they are higher margin because they're not paying Novo a large wholesale fee in exchange for offering this product at a higher price point. So it's a much better business for them if they're able to continue kind of finagling their way through this legal gray area. And there is now more emerging concern, or not emerging concern. Novo cut the partnership and had some pretty not nice things to say about Hims' practices. Hims CEO right after the bell, or maybe 30 minutes ago, came out saying, we're not backing down. So it kind of seems like the two are headed into a legal showdown in some capacity. Can get into financial implications afterwards, but I probably should leave it there for you guys to comment on it, and then we can get into the income statement impacts and the potential of all that in a little bit.
I don't follow this space, and every other comment in my YouTube channel was telling me that I was wrong on not buying Hims, and that I have to be a part of every sector and every flying company that is doing well. But the one thing that I've noticed from this announcement is that even the biggest Hims bulls are saying this is not necessarily noise, that there's a real problem here, and it might be a wait and see. So I'm curious if you guys also think similar thoughts here? And if you are in the space of, healthcare or anything along those lines?
I mean, for me, I've had, just to be blunt, I've had very little luck in my 7-year whatever investing career, stock picking in the U.S. healthcare system. So I can think of 3 losers off the top of my head that did not pan out at all. Progeny, GoodRx, and I can't think of the third one obviously because I said 3. So I'm sure there's a third, but I mean, U.S. healthcare just has such a ridiculous web of confusing regulation that you need to understand in order to really truly grasp the risks here and to understand what can go right and what can go wrong for these companies. And personally, for me, I'd rather focus on software and consumer discretionary and just sectors that I understand much, much better, and leave this in the too hard pile. And to their, I mean, I've been pretty maybe skeptical of the HIMSS business model for a few years. And for me, it's been, well, Amazon is coming to slowly roll out their own competing product suite. Look what happened to Teladoc. I know they say they have personalization, but Teladoc had a whole lot more data, and that didn't really seem to matter at that juncture. But I've been saying that for over a year now, and they've, I mean, even with the decline yesterday, it's up over 100% over the last 12 months. So their CEO and their leadership team, I really think it is their leadership team, because the business model is not that amazing and it's not that unique and not that special. And when you have these incredible financial results being delivered for a business model that is kind of meh, you think to yourself, what's going on? And it is the leadership team. And they have figured out a way to bob and weave and create these partnerships and expand into new territories and drive more personalization where they're allowed to keep this growth engine really humming. And we've seen some anecdotes of credit card data from Bank of America, which has been bearish and wrong for a few years as well, talking about their core business accelerating. And that really just puts that much more pressure on GLP-1 to really carry the torch and be that growth driver for the company. And just for context, I think at the beginning of last year, they were looking for about 725 million in GLP-1 revenue for 2025. And that is a sizable chunk of the revenue. I don't have I can pull it up really quickly. Yeah, sorry, go ahead, Ev.
Is that all from Novo Nordisk? My first thought here is what about Eli Lilly?
No, it's not all from Novo Nordisk, and it's also not all from GLP-1. So they have a $100 million oral weight loss business that's doing very well, that is not nearly as sensitive to regulatory concerns as these other ones are. And like you said, they can also still wholesale these drugs from these companies. I mean, Eli Lilly will sell wholesale GLP-1s to whoever the hell wants to put it on their marketplace. So HIMSS can, this just isn't going to be a really large profit driver if this is the new way that HIMSS is going to be doing it. But they can still offer the exact same product. They can, even if they want to, cut prices a little bit, use it as a loss leader, rely on cross-selling for everything else they're trying to sell, and figure it out that way. It's just harder for them to turn this into a bottom line driver for a long time if they don't have this legal permission really from the U.S. healthcare system, and as these giant rich companies battle against them to personalize pretty liberally in terms of what they're determining needs to be personalized and doesn't need to be personalized. And just thank you for asking that question, because it gave me a chance to look at 2025 revenue forecast. But GLP-1 is supposed to be right around 30% of total revenue. So that does not go to zero. Like Evan rightfully said, that absolutely does not go to zero. But the margin that you are tying to that revenue is probably going to be a lot more challenged. And there is probably also going to be some top of funnel erosion when your options, if this is what's going to happen, which it looks like it's going to happen, but who knows, maybe something will change in an hour. But if your options are now on him significantly more expensive and less differentiated than the other competition.
Yeah, that makes sense. I'm happy I didn't touch it. I probably am, like you, going to just stick with names that I understand more. And to me, it was always the risks that were hard to understand in healthcare. So
healthcare is so hard, man. It really is. I mean, healthcare, biotech, I don't really touch with a 10-foot pole, just because
Biotech sucks. But Oscar Health, this one's now, people are loving to go. Sorry for the phrase, balls deep into this one. No, that's the exciting one. I also saw a couple of people commenting Zeta. I don't even know what it is fully. But Oscar Health seems to be the new flavor that people are going to in this space. I assume we're in the same boat. No one has exposure there.
No, and not personally. I also don't have anything really intelligent to say about it. I don't know much about the business model aside from kind of what they're trying to do. But yeah, it definitely has emerged as another FinTwit darling. XTwit, FinTwit, I don't know, but a darling on the Bird app that's now called X. Yeah.
Yeah, I think it's like there is a lot of hype in a lot of these small names that are moving very quick, and it feels like people are back to paying for growth at all costs. And the names that are having a lot of very high top line growth are getting a lot of exciting premiums, at least.
There are signs. I mean, there are signs of market froth. We talked about a few of them last week. I mean, now you have Pomp launching a Bitcoin treasury SPAC. So I mean, there are signs of the animal spirits having fully returned, and some things kind of racing ahead of their skis. I think for Oscar, the interesting thing is, if my memory serves me correctly, that the multiple is actually pretty low. There's concern about next year incentives rolling off for healthcare. That could impact their growth. But the leadership team has come out and said, we're going to overcome that and deliver a 20% CAGR anyway. But that's only at 45 times forward, which I guess for an insurance company isn't that cheap. But I mean, and they're currently inflecting positively to positive EPS, and then 74% growth the year after. So in terms of a growth multiple, not super expensive. In terms of a business quality, I don't have, again, anything really smart to say about it. So I probably should just say, I don't know.
You actually brought up a SPAC. Are SPACs back? What's happening with SPACs? You going to touch any of those? I mean, even if it's a name
Chamath,
that you might
someone put in the chat, Chamath is back. Listen, SPACs are back.
Yeah.
Don't have to like it, don't have to touch them, but we're coming back.
I think the IPO process is important. It's there's a reason it's that tedious and that cumbersome and forces people to tell the public as much as it does beyond a 20-slide PowerPoint presentation where they tell us what their revenue is going to be in 10 years when they're not even in production with a real product yet. So I think, I mean, there are examples of SPACs that have done extremely well. I have a couple of D-SPACs in the portfolio actually, but they're kind of the exception to the rule. And I mean, you look at so many of these other companies that had cult followings throughout 2021 and 2022, and they're not even publicly listed anymore. I mean, I was like, the one that really it was Matterport. I think it is still publicly traded, or maybe they sold. I think they sold last year to someone, but I think it was 2020, and they're giving us 2029 revenue projections. And just thinking to myself, man, how do you guys have a decade-long crystal ball of where your business is going to go? And just saying it confidently, but I mean, if you want some entertainment, go look at those slide decks from some of these high-profile companies and what they promised you they'd be earning in 2025, and compare it to what they're actually doing right now, and there's a large gap.
Yeah.
These Bitcoin treasury companies, these Bitcoin treasury companies are weird though. Sorry.
No, I was just going to say, like, whenever iPhone started putting out some software updates that did essentially what Matterport did for the most part, it was interesting to hear how the bull case changes for, companies to fit the narrative, I guess. But let's quickly talk about Tesla, autonomous vehicles. We finally saw the launch of Robotaxi in Austin, Texas. The stock ran up 8 to 9%, I think, on the day. What were your guys' initial reactions of the official beta Tesla launch?
Evan, you want to go first?
Sure. I will go first on this one. I think that for some reason, well, I guess for good reason, Waymo and Tesla are against each other. And, I think that we're still at the phase of that where it's still good for one doing good and the other doing well, So I think that this was a big moment. The goalpost always gets moved, but this is something that's been promised for a really long time, and you're really starting to see it. There are Teslas being driven on the road with no one in the driver's seat. Full stop, end of story. I feel like if anyone doesn't go to San Francisco or maybe Austin now, you can drive in cars, no one in the driver's seat. In San Francisco, it felt like 1 in 4, 1 in 5 cars was either a Waymo, a Zoox, or a Tesla, which is going in the area. So that type of thing is really here now, and it feels like a couple companies are close. So I think that this was a moment for Tesla. You're hoping that it can scale pretty quickly, a lot quicker than Waymo is going. You're also hoping that the cost advantage ends up being pretty valuable. But I think that this event is bullish for mobility in general. And there's a large industry that's here of transportation that is clearly being shaken up right now, both in the vehicles themselves, which, is a whole different conversation, but in just driving. And I feel like that unlocks a lot of potential. So I'm saying a lot of words here. The underlying point is this was a big moment. Cars that drive themselves with no one in the driver's seat are here. There's probably going to be one or two big hiccups, but this isn't a decade type timeline. I feel like this is a years type timeline, and Tesla and Waymo are the people that are competing for it. So I think it's bullish for both of them.
Brad, is
I
Uber dead?
sorry, what?
I said, is Uber dead?
Sure, yeah, sure. Why not? Hope. But I mean, 10, 15 cars. There's a person in the passenger seat. There's some mysterious button that they have their finger on for most of the ride. I have no idea what it is. I can only speculate. Again, we talked about last week, seeing anecdotes about them making mistakes and anecdotes about them being perfect. So I don't know. I don't see this as some grand event and launch for Tesla. I kind of see this as a extremely highly publicized baby step in that direction of full autonomy, and they'll get there, I think. But I think a lot of us underrate how effective Waymo has been in navigating regulatory climates that are extremely different across many cities, and figuring it. Even in New York, they're now testing with the driver in the seat because they have to. But everyone's going to have to start testing with the driver in the seat. And I just think Tesla will get there. I think that's pretty clear. But I'll switch to Uber, talking about Uber in a second, but I don't think that they have some kind of autonomous vehicle monopoly that controls 80% of the market and have millions of cars on the road in a year or two or anything like that. And I think it's going to be, I do think it's going to be a very, very slow ramp and a city by city expansion. And I mean, let's see how long it takes them to actually roll out to Austin beyond offering rides to a few influencers in 10 cars. So I'd love to see that happen and them actually fully operating in a city like Waymo's doing across the country. But I mean, in my opinion, I mean, you guys all saw, or I'm sure a lot of people saw Uber respond very positively to how the launch has gone so far. And that has been because of some of the perceived bugs in some of these rides and getting off in the wrong lane and things like that. And I'm sure a lot of you have seen some of the streaming videos on social media about it making mistakes, and all of them make mistakes. Every single one of them make mistakes, but the frequency probably needs to get a bit better. And I've been saying for a long time, Uber is the only company not the only company. Uber is the most impactful company when it comes to making sure there's a butt in the seat for these cars as frequently as humanly possible or machinely possible, I guess. And I mean, their massive two-sided network effect is why these cars won't be cash incinerators in perpetuity forever. And I mean, when you pair that with the fact that they're going to be housing all of these cars in warehouses that need a ton of compute and a ton of technology and a ton of talent to be able to maintain these fleets, pairing that with now they're getting into data tagging and categorizing, where they're going to help companies train their own models with this mountain of driver data that Uber's collected over its entire existence while leading market share across the entire world. I don't know. I think Tesla's going to succeed in AV. I think Uber is going to succeed in AV. I think Waymo is going to succeed in AV. I think this massive market to think is going to have one or two winners is probably certainly not my base case. And I don't think the base case for a lot of people. I mean, you've got May Mobility, Zoox, Volkswagen, Mobileye, AV Ride, all launching in the next 18 months in cities across the United States. So they're all coming. Fragmentation drives a need to make sure, again, there's a butt in the seat more frequently than there would be on your own. And Uber is the company that does that. I mean, Uber is the ubiquitous verb in transportation. Uber is who represents all of the consumers requesting rides. And I think that the threat to that would be, well, what if Waymo just builds their own app and does their own thing? But with how aggressively sharp the impact Uber had on Waymo's Austin utilization rates and the success they're having in that market was, now they're rolling out exclusively in Atlanta. Yes. I just see all of the data, and that's not new, by the way. That headline cycled all throughout social media all day long. That was announced in September. It just launched today. But everything we're seeing is pointing to Uber being the company that can make sure there are people in seats more frequently and that these cars don't burn money forever, because they are very expensive. They are more expensive than what Tesla has right now. I mean, but then you hear things about Waymo's rolling out a new generation of hardware at 50% of the cost. And then there's another generation coming after that with more cost reductions. So I really think Tesla's massive cost advantage, which is super valuable and super important, and somewhat defensible, may not be somewhat defensible, but maybe not permanent, just because I do think that's a byproduct of this company having the best electric vehicle manufacturing footprint in the country and being able to use that to build their robotaxi fleet. And all these other companies are really starting from scratch and building out massive fixed costs to scale before the revenue hits. So I mean, costs will not scale forever. Revenue will start to flow in. The hardware will get cheaper. Things like synthetic data generation that NVIDIA is doing, which really is just a fancy way of saying we use this data point, we generate 1 million data points that are very similar to it, and we let the model learn from all of them instead of this one data point, because collecting physical data is extremely expensive. I just think there's a lot more cost disinflation coming for the entire industry, which is going to breed competition, which is going to make people figure out how to, going back to the same idea I've been talking about this entire spiel, make sure that there is a maximum instance of people being in those cars and paying me money for that expensive hardware.
Yeah, going back to the actual Tesla event, I just thought I was surprised by the market reaction, because we knew it was going to happen on the 22nd, especially whenever all those influencers got their invites to the event. So people were pretty set on them actually launching on the 22nd. Then as it was happening, I didn't know what we received new that got people excited versus what we actually saw. So 9% move on this company that already holds up nearly a 200 XPE was surprising to me. That being said, I'm super bullish on the actual technology and like what it means for humanity in general. As a singular investment, I was surprised that the 9% move ended up happening. Like, I don't know. I don't know if we end up seeing the $900 billion of revenue in autonomous driving by 2029, like Kathy Wood assumes.
I think you were talking there like
Kathy Wood's multi-year forecast with a large grain of salt.
First of all,
like you're implying, Tanner, like you're already implying. So I'm sorry. Go ahead, Ev.
Kathy bought into that Circle IPO. She's doing nice while there. So
she's killing it there. Yeah, got to give credit where credit's due. She bought that, and now she's selling it near the top. And well, I mean, who knows? Might not be the top, but she's done well.
For the sake of market health, hopefully near the top.
Yeah. That's a very interesting name.
A little bit.
Holy.
The 9% move. One thing I would say is look left a little bit. I mean, it's not like Tesla is breaking out to new all-time highs at a crazy point, but you know, Tesla isn't a stock that's trading off of fundamentals right now. So if you can get a headline in an area that the market believes in, that it takes as meaningful, they'll speculate. So I think what this also tells you is, just like in the HIMSS news, that the market is really focused on GLP-1s right now. I think that it will move in order, like a lot more off of that than maybe it should. I think the market is also really focused on AI, robots, everything like that, and full self-driving autonomy is probably going to be one of the big first real-life use cases everybody sees of that. So I think the market is in a very willing place to speculate on that theme, which probably end up being good for Waymo and Uber.
And there's one company that's built a large, profitable electric vehicle business in the United States, and that is Tesla. So giving them the benefit of the doubt makes some sense to me. And while I would love to see more points on the board to start giving them that benefit of the doubt, I completely understand why people are thinking to themselves, Elon will figure it out. Just like I think to myself, when TikTok was going to kill Meta, Zuck will figure it out. Like these are brilliant, talented, somewhat crazy, polarizing founders, and they get shit done. And I think they never get shit, or Elon doesn't really get shit done on the timeline that he says he's going to, but he gets it done. So people thinking that trend is going to continue is not based on nothing. It's based on historical trends and him being able to get it done in the past. So I do get it, even though I'm a little skeptical of timeline and how quickly this proliferates. Thinking that they won't figure it out and won't be one of the players, I think is probably not a good bet.
You know, as the technology becomes more equal, as we get further from the bleeding edge, and now it's just normal for self-driving cars, does the market get more fragmented? Do we have a bunch of people making this stuff, and you're not going to have 25 apps that you go in and use? And do we kind of get back to exactly where we're at right now with all cars now using the Uber network, but now it's just a much higher margin business because there's no driver? Does it just go full circle at that point?
I think so.
Yeah, that's what Uber Bulls believe, right? like Are people going to download 10 different apps? Is Volkswagen going to have their own for this new AV that they just announced? No, they're going to partner with Uber, and Waymo is partnering more with Uber, and like
they'll partner with the company that's giving them perks for ordering for getting groceries and having a package delivered and having dinner delivered tonight, so that they can get the same loyalty points and perks when they're getting their mobility rides. I mean, Uber One is an extremely sticky subscription, and they're going to want to be rewarded for their loyalty, and so using many apps kind of interrupts that.
Speaking of which, I like Uber. I also hate Uber for that same reason. To cancel Uber One is the most annoying process. I think I still have it. I don't even want it. But anytime that the payment comes out is whenever you're reminded that you have that subscription. And then if you try to go and cancel it during that time, it says you have to wait 48 hours or you can call to our customer service thing. In 48 hours, I'm not going to remember about a $5 subscription, so I don't care to cancel it. But it's always that 48 hour, and they know that's when people want to cancel it. And they've gotten me like 5 months in a row. I don't even use Uber right now.
I think there are pending lawsuits for that very issue for Uber, and I think there is probably a slap on the wrist coming, and you need to change this a little bit. I think you're right.
I actually get a lot of value out of Uber One. If I've been told from people who work at Uber that if you use it more than 2 times a month, and like actual friends, so not like salesperson or whatever, but if you use it more than 2-3 times a month, it tends to pay for itself.
Yeah, I mean,
that's
some
where
of the
about
things,
the bar is.
Some of the things they're doing also with some of the commute products they just rolled out, where, hey, if you commit to 10 plus rides a month, we'll give you discounts, and you can pick your set destination, and we'll pick you up there between this time and this time. And just, I mean, they're creating daily use and habits and loyalty. And I really think that a product without a driver in the seat doesn't really change that formula all that much, unless there is one app with all of the AVs and that belongs to Waymo or Tesla. And then in that situation, Uber's kind of SOL, I think, which is, I don't think is likely, but just it's always possible.
One thing that I think is, we'll look back on this in the next couple of years, that I think is pretty clear right now, is the car market, which is a very large industry, one that hasn't changed much. And honestly, probably the transportation industry in general, but whatever, which has been stagnant and maybe, had incremental growth forever, is going through a really big change right now. You could argue EVs is it or whatever, but I think this autonomous aspect of it is something that is a step change, is very interesting. When you look in history in these type of step changes, the companies that were big before aren't always the companies that are big after it. I think Uber's focus on transportation and becoming the experts in that space will end up being good in this area. But I think the opportunity is, Ford, GM, Toyota, like there is room for just people who can produce, manufacture at a really high level, like Toyota Pro Systems, TPS is something, if you go to business school, everyone's learned about it. So there are definitely a space for these companies, but I think that it doesn't feel like something that's decades away. It feels like this decade, there's going to be a lot of changes coming in that area. And I just think there's space for all these companies. Amazon's doing stuff with Zoox. There's going to be some partnerships and consolidations coming out of this, but
I think you're so right that there are disruptor software companies and legacy OEM hardware company partnerships coming. Like that makes way too much sense not to be happening. With you guys
and
have
the OEMs better act quick.
Yeah, sorry, go ahead.
Brad, the OEMs better act quick, or else they're going to be the ones getting acquired, not the ones doing the acquiring.
Fair point. Everyone better be acting quickly right now. I mean, if you're not acting with a fire lit on your ass, you are not acting with the appropriate sense of urgency.
Is Uber not too far off and at a too far of a market cap size to be thinking, hey, do we buy one of these OEMs? I'm not saying they go down that route, but it's one software company in the transportation space that could be thinking of buying one of these large OEMs.
So much, but I don't want to rule it out, because it doesn't sound that who knows? It's probably not super likely, but it's possible. But man, I would hate that so much if they added those about as asset heavy as you can get, so much debt. Like, that would make all the things that I love about Uber's business model immediately not true anymore. But yeah, I do think Things like that are going to happen. Lyft, the fact that Lyft hasn't been bought up by Amazon or by Google or by, well, I guess maybe the FTC is the elephant in the room saying that's not going to happen. But Lyft should be purchased by one of these companies. The subscale ride aggregator should be purchased by someone else with a great asset on another part of this opportunity, I think, but hasn't happened yet. And the CEOs have said a few times. Yeah, sorry, go ahead.
I don't know. I keep interrupting you, so don't say sorry. I feel like I don't know if we talked about it on here, but like the winner in a space gets the big valuation. Second space, the second person, like that valuation is always super far. Lyft's the clear second place as its own company. Great. It might go up as a space as well. If you're thinking that theme, I'm buying Uber.
Yeah, leader. We talked at the beginning about investing mistakes and how U.S. healthcare has kicked me in the butt every time I've tried to invest in it in the past. Investing in the second best because they're cheaper has kicked me in the butt over and over again. It's a good enough company trading at a large discount versus the better company trading at a large premium. And more times than not, that large premium continues to be fetched and earned. And I mean, just like we talk, I think Cloudflare was the example we used last week of just like, I've been saying to myself, man, that's such a great company, but man, that's way too expensive. And I've been saying that since 2018 when it went public. So here we are.
The one that I keep looking over is SentinelOne versus CrowdStrike. I'm like, man, the valuation is so different, but there's a first place and then there's a second place and it's not close.
No, it really is. Even with a global outage, SentinelOne still didn't really close the financial performance gap versus CrowdStrike, as they were handing out free incentives to every customer to say, I'm sorry, please stay with us. And they're still outgrowing them and still making more money and still expanding margins. And so winners win, right? That's the saying.
There's a Warren Buffett quote for everything.
That was Charlie Munger who got in his ear and changed my mind. That was the Charlie Munger.
Thanks for the tweet idea, though.
You're welcome. Saving him from, it was like it's not saving him from Benjamin Graham. Benjamin Graham's one of the best investors ever, but
saving him from Benjamin Graham.
Yeah, tweaking his extremely literal interpretations of everything Benjamin Graham taught him and pursuing quality and growth and things like that.
Which is crazy, right? Like a complete pivot from his entire, I couldn't imagine being like 40 years old, investing your whole life, and then going, oh, I did this all wrong. This cigar butt approach, bad. Charlie Munger's right. Let's buy quality businesses at fair prices and let's completely change. Like, it's so funny, how even past 65, his investment style was still changing and improving all the way till essentially now.
I mean, from See's Candy to Coca-Cola to Apple to Snowflake. That was the he didn't. It wasn't him who bought Snowflake pre-IPO, but it was Berkshire, and he did sign off on that. So,
yeah, and Nubank. There's a couple of newer, more techie names, but the world's just going tech. I mean, that's you're eventually going to end up with some tech companies in there now. There was actually a report from Couture, the two founders of Couture. You got to say it with a little flair. But they said, I forget what the timeline was, that 75% of the market cap in the stock markets will be made up of some form of artificial intelligence. Do you guys have a similar thing? I guess that's sort of what happened with the internet and technology now. There's really no such thing as a tech company versus a non-tech company. You kind of have to be integrated with some level of technology. How are you guys sort of betting on AI? Because like, to me, it's my every day is thinking about, I don't know, NVIDIA or how Salesforce is going to essentially upgrade their services and every other business in between. But do you guys look at that sort of space to say, oh, is this company doing this or not? Or do you look at every company individually without saying, hey, does it need to have these buzzwords?
I think sometimes, I mean, let me think of a super random. If Celsius is getting on an earnings call saying AI 50 times a quarter, that might make me a little bit less excited or interested in them. So I do think there are sectors and industries where, there's going to be fulfillment automation and fringe parts of their business that are probably improved, but the core operations probably won't change that much. But when I hear Gen AI, I just think GPUs making machine learning way more scalable and way more powerful. So the same machine learning algorithms we've been using for 15 years that CrowdStrike built its business on, that all these software companies built their business on, are now just several 100x, 1000x, 10,000x times more powerful and capable of completing tasks just way more effectively and way more efficiently and way less costly than they were under the machine learning buzzword before machine learning turned into Gen AI as the new buzzword, which is to me really just GPU powered machine learning. I think, and along those lines, to answer your question, if you're not doing machine learning on large scale as a modern large public company right now, you're probably quickly falling behind every single one of your peers that truly is doing that. So I do think most companies will be AI companies. I mean Celsius. In Celsius, hopefully there's not any algorithms in their actual like drinks, but I think in terms of how they're personalizing cans for marketing campaigns, for how they're spending dollars on Meta and Google, for how they are using robotics to create a 24-pack to deliver to Pepsi to eventually distribute to their partners. AI will touch every single one of those things. I mean, you hear a Kava earnings call and how they are using Gen AI cameras to measure rate of ingredient depletion, so they know exactly when to tell their cooks, hey, you need to make more of this,
Wow.
so we don't deal with man, I feel like I go to Chipotle and 50% of the time they're out of the veggies or chicken or something that I really want, and they're trying to fix that in a very legacy traditional industry that you wouldn't really associate with AI, but doing so effectively with AI. So I think it will touch way more than we think it's going to touch. And it's just, and I don't even think we can fathom what that's going to look like in a few years from now, which is the most exciting part to me. But yeah, to answer your question, I think it will be an AI economy, just like software is eating the world. Machine learning will continue to eat the world under this new buzzword that we now know and love called Gen AI.
Evan, you touching anything that doesn't have the AI buzzword on it?
Yeah, I honestly, there are certain companies that are going to lead in this space, invest aggressively, profit invest in high margin ways, like powered by NVIDIA Blackwell.
It all is.
Exactly.
I'm sorry, AMD. For now, it all is. We'll see how AMD does later this year.
Yeah, so they were the only one making money in AI for a while. Hopefully, we're starting to see more companies do that in different ways. But one of the things that that I do believe in is that we are in the first innings of AI, and that this is going to be something that touches it's going to touch everything. And it's going to be hey, some industries it's a 5-10% increase in productivity, and maybe some industries it's a 25%, whatever it is. So I think that there's an underlying growth in the U.S. economy that is going forward, that all of these companies are vying for growth and stuff going forward. So I think that the backdrop feels strong with this AI aspect of it. So, I am totally fine to invest in companies. Like if you were investing in Deere a decade ago, you probably didn't think it was going to become this crazy tech company, but here we are. And I think that's going to continuously happen. Like you were talking with Kava, it's just going to make everyone incrementally more profitable. So I am very happy to invest in some of the companies, a la, I see daily stock picks in the chat, a la Apple, who's not going to invest aggressively in this area. They're going to let all these other companies do it. Once the products start to get to the point where we can just profit off of it and make everyone's days better, we're going to increase profit margins 10, 15, 20%, and continuously going, increase our services, get more services unlocked. So not only are we going to be able to take costs down, profits going up, buying back stock, good combination. So yeah, I'm totally okay to invest in the companies that are going to benefit from something without extra costs.
And like you said, early, late, where are we? We've had that conversation in a few of these episodes, so I won't get super into that. But I'll just, one anecdote. Infrastructure gets laid before apps can be built. So you need these data centers set up before we can start building cool software with the compute that's been put into these data centers. So you hear from MongoDB and Snowflake and some of these other pure play software companies that are talking about, we're seeing experimentation, we're seeing people toying with AI apps and creating them, but we really haven't moved from experimentation to production. And I think that is still a byproduct of we're somehow still being early. And you see that in NVIDIA's results. You see it, in Broadcom and what they're doing on the networking side with ASICs, which are just custom chips that are less general purpose than the GPUs that NVIDIA sells. And a lot of other companies that are still absolutely killing it and growing well beyond their multi-year growth CAGRs because the infrastructure boom is still going on. And I think eventually that infrastructure boom will start to translate into a software boom we've seen some early leaders, Palantir, ServiceNow. Maybe you can call Microsoft Copilot an early leader, although I don't know about that. I think they've just gotten a large boost from OpenAI, buying a ton of renting a ton of GPUs from them. I think we are still early, and I think evidence of that is still going bananas on the infrastructure layer of this opportunity, which tells you there's still a lot more to come in other pockets of the opportunity thereafter.
What does this mean for the average valuation? I mean, there's some permabulls out there that point to the PEs of the S&P 500 and say, you know what, we're getting to scary territories. But if productivity like this is pushing Kava to have a more productive restaurant environment, what does that mean for average multiples that people are willing to put on companies? It's kind of a pretty clear answer, but like, I mean, is that really where we're headed?
I think, well, what are we at? Like 22, 23 times forward on the S&P, something like that?
Yeah, that sounds about right.
So low 20s, some kind of low 20s earnings multiple. I think so. And I think, I mean, it's going to have to lead to faster profit growth at some point. We're like in aggregate, we're spending too many billions and billions of dollars for this not to need to lead to an ROI and better margins and efficiency gains down the road, like everyone's promising. I think at some point this will become a bottom line driven narrative, and you will need to show that all of this money you're spending is worth it. Did that answer your question?
Well, you know, I think that there was a gap between a lot of the, like if I go back to sort of a .com era, there was a gap between what people thought was possible versus what was actually the like real revenue unlocking, productivity gaining ads. I don't feel that way about artificial intelligence because there's not a need for like hardware to actually be sent out and designed and made, and you know, everything like software rollouts are almost immediate on platforms that are already customers have, like you know, rolling out Agentforce to Salesforce users that already have that in their organizations is instant. So I just do see a potential things getting frothy for individual companies already. And does that lead to sector-wide excitement about artificial intelligence where people maybe push stocks higher? I'm not going to say any names, but there already is names that people get excited about because the potential for growth is exciting when really the reality might be a lot different.
You know, I think that we're kind of asking, like, are we working this into the existing platforms, or are new platforms going to be created? Is the Apple iPhone going to be the phone of the next couple decades, or is Johnny Ive's startup going to come in and, you know, make us think about AI products? Because that's what it is so far, but who knows if that's right long term. Maybe it's just a bunch of incremental changes, and you get to that head point where, hey, maybe we needed to take that big step change. We need to go forward. But it is clear in the world that we've created now, AI can make us incrementally more efficient and more profitable, which probably does lead to higher valuations.
That's phase one. And I think the totally new things that stem from AI, the new products, new ideas, new workflows are going to come eventually. But right now it's really just, let's make digital advertising way more personalized and way more effective. Let's make our software engineers, let's take a lot of the tedious work off of their plates and make sure they're doing more reviewing and we're automating more code on their behalf. So it's upgrading legacy workflows at this point in time. And I think, and that's really what MongoDB is talking about. Like they're housing app creation and app development in on top of their data platform in their company, and they haven't really seen newness coming yet. And that's where they'll make their money. But I really think we still have a few more years of not quite understanding exactly how to use all of this compute that we've just laid and using it in ways that are very familiar to us, like Meta putting it in their Advantage Plus campaign automation product and making sure return on ad spend is that much better for their advertisers. So I think it's boring. Boring is going to come first in terms of what provides monetization and tangible financial value, and then not boring. And I guess ChatGPT came first, and that was anything but boring. But in the future monetization and the exciting newness, I think is ahead of us, which again is just why I get so excited about where this is going.
You know, and this is to bring it back a little bit. One of the things that I'm super excited about the Tesla event this weekend is I really think that full self-driving self-driving cars is AI. It's a real world example of AI. I think it might be one of the first real world ones that everyone gets to go in and see and touch. And I think that is a very meaningful thing and gives people more reason to speculate in other areas, humanoid robots, whatever aspects in AI. But to me, it feels like self-driving cars is one of the next in real world AI and all that area is maybe getting to an inning too. I don't know. We'll see. But that's one of the things that made me exciting about this weekend is this is a clear example of AI being shown out there, showing that it's not 5-10 years from now, that it is possible now. We'll see where it is. Yeah, but Waymo's doing this, but yeah, that also means, hey, it's here now. So that's what really kind of underlying gets me excited about this event and why I think it was a big deal. Maybe not for Tesla stock to be up. Maybe not for just Tesla stock to be up 9%. Like, I think that move makes sense. I think all the full self-driving names should have been up. So
someone in chat said Tanner is bearish on Apple. I actually am one of the big believers that the smartphone doesn't have to be an Apple product, but that this will be one of the final designs that we actually do come up with. I mean, I don't understand how I could be proven wrong. Obviously, I don't know what Johnny Ives and Sam Altman are working on, but if it's anything like the controversy between, what was it, IYO or whatever, and it's some sort of earpiece, I just can't imagine that people are talking out loud in public to a personalized device. I mean, screens are just a little, like, they already solved the perfect issue. I really liked what Craig said from Apple, that like, if you're going to want some sort of device, that it's hard to beat the smartwatch already. Building software on top of that watch is what they can do, but the actual hardware is already probably pretty perfected.
I don't know. I would focus more on Mr. Zuckerberg than Sam Altman and Johnny Ive in terms of hardware disruption, because I really think the Oakley glasses. I mean, it's just such a natural way to interact with the physical world. To just be for your hardware to be seeing exactly what you're seeing and to have a real time, basically natural stream of your vision and your voice and everything around you. I just think, right. I mean, we're going to be the 35, 40-year-olds like we made fun of 10 years ago, figuring out how to like, what does this button do on the iPhone? Like, and I think we're going to have to figure that out, because it's going to be such a better device than what we're currently using.
I'm not anti.
I don't see screens as the final frontier. I see, but maybe I'm wrong.
I would consider that a screen though as well. I mean,
okay. Okay. Then I misunderstood.
Yeah, I like the glasses as well. I actually think Apple will be all over it. I think that they'll be a part of that. They already are in VR. They'll be a part of AR as well. But I think that visual is a great way to take in a lot of information, but also it still remain private and your own. And audible only information is just not going to work. I like the Rabbit, all those other AI devices that will order you an Uber or book your vacation via audio only. No one is ever going to do that. I don't care if you tell me it's a 5-star. I want to see what it looks like. Like, so
I mean, I just booked a Zion hiking trip and used Gemini for find me hotels, find restaurants that I like, find hiking trails I want, and I verified every single one of those facts with my own research on Google, making sure I see pictures and that looks fine and that looks fine, and well that you need a permit for that hiking trail and it didn't tell me about that, so I got to figure that out. Like, so yeah, I think it right now it's augmenting human intelligence. I think, and that probably will be the status quo for a while.
Evan, what are your thoughts on this?
We're gonna do it. We're gonna interrupt alert. I'm surprised that this literally came up in this chat. Donation alert. You got a donation from JJ. What do you think of D-Local, dude?
I don't think much about D-Local at all. I mean, I know a little bit about their history with Facebook and everything like this, but I don't actually cover D-Local. I mean, Brad probably has some comments for you.
I don't, but I do know that they had a very impressive CEO hire. Didn't they hire Melly's
CTO?
Yeah, I mean that was definitely a reputation builder and a credibility builder. I know. I mean, they have a lot of exposure to markets that carry a ton of geopolitical risk. I know they're cheap. I know they're quickly growing. I know some people think very, very highly of them. I know Muddy Waters has come out with a short report on them. I think it's a pretty polarizing stock and somewhat of a battleground. And in terms of what I actually think, I have to say the exact same thing Tanner did. I don't focus on it enough to be able to give you a valuable answer other than I do not know.
Yeah, I apologize because you
No
started
worries.
that with such an amazing comment, and then I didn't
I
offer.
fired my one bullet at the very beginning. The only information nugget I had. Yeah, that's.
So my thoughts on shout out to him. Make sure if wherever you're watching this, if you're watching on Twitter, make sure you're going and follow Brad and Tanner. It's tagged on my thing. If you're on YouTube, go unsubscribe to Tanner. No, I'm kidding. Go make sure you like this video too. But I appreciate everyone. Make sure you're following the people. These guys also have a lot of like extra stuff they do. I know Tanner has stuff in his bio. Brad does too, where you could see his stocks, and Tanner has a great charts and different Excel sheets that you can go in and get. So a lot of extra stuff that these guys have that you can go in and check out. One thing I just think people love to hate on Apple and talk about no innovation or whatever. This is the best hardware company. Well, there's a couple good hardware companies in the world, but this is definitely one of the best ones out there. And this is in the US, the one that people go in and do. So if we're talking about an innovation coming in the hardware space, Apple's going to own it. Or be second place. Maybe you can disrupt it or whatever and say, and we're talking about an open source Apple playing that catch up game. But yeah, I just don't overcount. Don't count out Apple in the wearable space. They are the kings in that area. They have your wrist, they have your ears, they're gonna have your glasses too.
The problems with Apple are not that I think that company is going away anytime soon. It's that they do suffer from they have suffered from a lot of cultural problems, design like they have their problems as well. And the price that you have to pay in order to acquire Apple makes the investment a hard pill to swallow for me. That's the only problem that I have with Apple. Not that they're going to go away anytime soon. And I'm not here to say that if Apple users switch to a Pixel, they're going to have a better experience, and that's a guarantee. But I'm not trying to say that. But
if you are a user of an iPhone and you go to another device, you're an idiot. I'm sorry.
If you go to a Pixel, you're going to have a great time. The products are great. I switched to a Samsung from a Pixel, and it was the greatest mistake I've ever made. The Pixel is the best phone.
But it's just a green text bubble. It's icky.
Yeah, well, that's true.
That's the Apple bull case in one sophisticatedly put sentence. Blue text bubble. Good.
It is a scary. It is becoming more of the case. I hear that every single time whenever people talk about Apple, they always bring up the text bubbles, and I'm like, oh man.
Yeah, I mean I've tinkered and toyed with other phones that I've thought to myself, this is like a better piece of hardware than what Apple's selling, and it doesn't even cross my mind to buy that instead of the iPhone. So yeah, I guess that's one note for Evan.
Snap out of it, guys. You guys you're
it's a cult for sure, but it's the entire United States is in that cult, so I feel like I have to be in the cult.
We just actually ordered new phones, me and my girlfriend, and once again, we did the whole iPhone Pro Max, whatever for her. So the cycle continues where she's back on it, but I'll be green bubble forever.
I knew I was a fan.
Yeah.
Smart person, smart girl.
Yeah. But
I will say, like, there's so much hate on Apple. There's no AI in this story or whatever. I feel like Apple, there's a natural trade here for Apple to go closer back to those all-time highs for that 250 level. And we'll see from there. I get what you're saying on the long term, but I don't think the platform is changing. They're buying back a lot of stock. We'll see how growth comes in. Maybe they do need a new CEO, someone who can, maybe we're going into a time of immense change. And this also goes to the point of AI and valuations and stuff. If the pace of innovation picks up and the market thinks is going to pick up for the next couple of years, valuations would go up.
Do you think that is not the case?
No, I think that is the case. I definitely think that's the case. I think two Kathy Wood mentions in one stream. What a day. 2025. Great time. Maybe she isn't a great investor. Maybe she isn't a great stock picker, but the underlying concepts and some of the stuff there, I really don't think is far off from where we're at right now.
Completely agree.
She is a great marketer. She's a world-class marketer for sure.
Well, I won't just give her only that credit. I really do think that the big ideas going back the last 5 years, a lot of people put shade on that, and I think that a lot of those ideas were very correct. Her bets on those ideas were like she said, oh, data centers, artificial intelligence, everything like this is going to be the biggest movement. Agreed. Zoom is going to be the number one bet on that. Yeah. It's like, how does that match up? I don't get that.
Like she should be Yipit. She should be Yipit doing third-party sector-based research for other firms to then use that research to stock pick. Because she's, like you said, she's excellent at that. Thematic big ideas.
Yeah.
And understanding where the puck is going. It's just applying those ideas in her stock picking has left something to be desired, I think.
Well said. Well said. Is there anything else that we want to touch on? This has been one of the longer, if not the longest episode.
I was surprised. It's been a slow news week. We really got up to an hour there.
I like bugging Evan about Apple.
I do have one that I want to ask you boys about. Oop, wrong screen. Sorry. Wait, I want to ask you. I saw some data around student loans, and I know we got some SOFI gentlemen up here, and that tends to get tied with this company a little bit. So I wanted to get your thoughts on this data around student loan delinquencies picking up a little bit. I know everyone's like, the market's just been up and to the right. Hey, look at these awesome live on X's. Look at you getting destroyed. What were we gonna say?
So SoFi. So this is if you don't know what and Evan does. So I'm not saying he doesn't. He does understand this. But SoFi's business is, for those listening, refinancing these loans. They're not originating like the federal government is as the primary credit allocator. So the fact that more people's payments are becoming delinquent and coming due and they're collecting more is very good for SoFi, because it is creating a sense of urgency for people to refinance into more affordable payments. And SoFi, I think, has like 60 or 70% market share of that refi market for student loans in the United States. So they are the primary beneficiary of that happening, of that trend playing out. And they will do so, and they will take advantage of that with the same hyper conservative credit band they've always used, 760. I think for student loans, like 770 plus FICO on average. So really catering to ultra prime. So the most fragile borrowers that are struggling here, unfortunately for them, probably will have to look elsewhere for refinancing. And the other thing to keep in mind is that rate cuts are an accelerant for not just mortgages, but also for student loans, which is really important because somewhat counterintuitively, rate cuts are actually somewhat of a headwind for their personal loan business, because it disincentivizes people to refinance from variable to fixed rate credit. Because I mean, there's no incentive to fix your interest rate in that environment, so it's actually not as positive as people might think for a lending product. There are tailwinds, there are offsets for that headwind, but it's not as purely beneficial like it is for student loans and home loans. So we're now seeing rising probabilities of getting a cut before September. Fed maintained 2 rate cuts for 2025 as their base case. We're probably going to avoid a potential oil shock. It's looking like, which they probably would have seen through anyway, and focus on core, which excludes food and energy, but still good for rate cuts. So the combination of people coming to terms with the fact that I have to pay back this loan, who's going to let me do it in the most affordable way? What macro tailwinds or what macro factors are helping them do it in an even more affordable way? And so it's a pretty harmonious string of tailwinds for this business right now, and for SoFi. And I will say the return metrics and the spread that they're collecting on a student loan is not as compelling as a personal loan, but they are not. I mean, they have such a large balance sheet cushion right now on their capital ratios that this is basically them taking unproductive cash and putting it into something like student loans that are still netting them more net interest income. Sorry, bad sentence, but wanted to put that out there because some people think, well, switching from unsecured to secured, that should be a net interest margin headwind. But you just have to remember the fact that there's still a lot of balance sheet optimization going on. They're still swapping out a lot of deposits, unproductive deposits for credit. And when they're doing that with student loans, they are still realizing a positive impact on their total net interest income on the same base of assets. So yeah, sorry, that was a long answer.
Yeah, to more of the exact screenshot that you showed, Evan, I think that it's important for people to not look at the federal student loan sheet that you put up and assume that that's anything like the private student loans. Like they have essentially zero correlation because that's everyone. And what SoFi has is cherry picked, you know, the best fruit that you could possibly have picked off that student loan tree. And so it'll be very, very different. Plus the flexibility of payment offerings that SoFi has would lead that if people are financially struggling, that they could potentially open up for different payments, stuff like this. So very, very different offering.
And not to use short-term price action as evidence, like I criticize people for doing all the time, so I'll be a hypocrite here. But the fact that that it didn't respond negatively to this news coming out, it responds negatively to every single piece of news that can be interpreted as slightly, modestly, a tiny bit negative. So the fact that price action was kind of unabated and didn't really react to this, I think, is a somewhat probably noisy hint that what we're saying is probably well placed. Obviously, we think that, but yeah.
I also
I
saw a headline around buy now, pay later. And this was from FICO, actually, now that I'm thinking about it. It was about them being able to actually track them in your credit scores. I don't know if you guys saw that. Does that mean that if I take out a BNPL loan right now and don't pay it, it will not impact my credit score? Is that what you're telling me?
I think quite the
Is
opposite.
that what okay.
Your payments are now due. We're no longer in this.
No, I'm not. Not for student loan. For I'm talking about for like the buy now, pay later. I saw a FICO headline talking about that they are
it will affect your credit score.
Yeah, no, it will. But does that mean it hasn't been? Is what I'm saying.
Oh, I misunderstood. I'm sorry.
Because that seems like some large oversight.
Yeah, I think that's been the big concern with buy now, pay later is that it's sort of not looked at like a traditional credit product, but yet there's potentially large mounting balances that large financial institutions were not tracking. So there were a couple, if you want to call them a short report or something, talking about a potential buy now, pay later bubble that has been accruing. And then Afterpay, Affirm, all of these companies had to come out and say, actually, we're doing fine and that these are terrible. I forget who wrote that report in the first place, but it was something about a mounting buy now, pay later bubble. But FICO is essentially saying, hey, we're going to make sure that if there is something happening, that we can keep track of that to more officially say that this customer is not paying back their buy now, pay later. So you might not also want to give them a credit card.
Yeah, I also forgot noodle swaggy, something like that in the comments. Yeah. You said I wouldn't say it in that way. You can refer the bums out, but what the idea within that rough cut message is the right one. I forgot that that's an oversight on my part, so I'm sorry. But they do have SoFi Lantern, that marketplace where they will refer out applications, not just for personal, but also for student loans. So the important thing about that is they maintain that customer relationship. So just because they say no to this person on a student loan refi, they'd be happy to give them a debit card. They'd be happy to give them a high yield savings account. They'd be happy to give them a brokerage account. So they get all that cross-selling potential without taking that unwanted credit on their balance sheet. So good point. Noodle swaggy.
Anthony Noto just did the longest post I've ever seen him post.
Oh, wow. I have it up on the screen, trying to share it, but it's about the Genius Act, saying it doesn't go far enough. I can actually zoom in a little bit, but yeah, as you can see, we're 7 deep. Each of them has the show more, so
Jeez.
I don't know, interesting wording of it, but we'll let it go. Genius Act is a great step modernizing our financial system, but it doesn't go far enough.
I'd have to read. Yeah.
What is your instant take on this 7-page paragraph essay that you just read? All right, now go vote on the bill. Congress, U.S. Good job, guys.
That's probably what our politicians are doing. Here's a 100-page document on a bill. Here, assistant, read this and give me 3. Actually, no. Here, ChatGPT, give me 3 bullet points, and so I can sound like I know.
Honestly, I've just gained a lot of respect because that's what you just put me through. You're like, hey, what are your thoughts on this? I haven't even begun to read it.
Should I say what the Genius Act is for folks who are?
What are stable coins? I've seen like every single person's coming in and talking about it right now. Circle's going crazy. Yeah. I saw Vlad Tenev on CNBC today, and one of the things that he talked about that I thought a little bit interesting was like he was saying, "Hey, I'm going to Europe. We're doing this there. This is actually an area where Europe is leading the U.S. in an innovative area. The U.S. is behind. Like, there's probably no other area where you could say, hey, this innovation category, Europe's ahead." So I saw that this morning. Tell me more about this Genius Act, though.
I got you. Okay, so basically formalizing rules and regulations on the stablecoin industry. I'll just read the paragraph that I wrote in the last week's article. Legislation clearly defines stablecoins as a digital currency closely tied to the value of traditional fiat. It mandates reserve levels and capital ratio requirements for issuers. So similar to what banks have to deal with, while obviously blocking money laundering and illegal practices. So initiative is expected to it's expected to fortify the strength of the U.S. dollar because a lot of these reserves that they have to keep on their balance sheet will be held in either bonds or U.S. dollars. So more demand for those assets effectively allows the U.S. dollar to gain more direct exposure to digital assets and not be left behind. We talked about this a little bit last week. Bitcoin is competition for the U.S. dollar. Stable coins are seen as an accelerant or a complement to the U.S. dollar. Really what this does, and then Coinbase came out with their payments product right after this. PayPal has come out with a couple new announcements. I think it was Fiserv or something yesterday. So there's just a lot of moving pieces in this space right now, and it's really it's about and card networks are all swept up in this. So it's really about how will these rails, these networks that have created connections between merchants and issuers and acquirers and consumers, will they just now start pulling funds from a digital wallet and using stable coins to make their own networks more efficient, or will they get displaced? The displacement kind of seems probably a bit dramatic to expect that Visa and MasterCard to lose their gigantic moat and their brand ubiquity and the trust they built over a few decades, where in my mind, it kind of leaned towards the fact that they will try to become one of the operators of these stable coins, which is really just saying that they'll continue to be the facilitator between these four parties as the transactions take place. And just the source of funds will come from a digital wallet instead of a bank account. So yeah, a lot of moving pieces. That's just like autonomous driving. If you are not sprinting 100 miles an hour as a financial service company in stable coins right now, or if you don't have a team dedicated to this, you should probably get on that because this is, it's just like metaverse was BS, but a version of the metaverse and metaverse was really visual AI and trying to, in the early parts of using GPUs and compute to make things prettier and higher performance. And that really switched to using this compute for core AI and Gen AI and agentic AI. And I really think the equivalent there is people roll their eyes at Dogecoin and all these other meme coins, and rightfully so. I roll my eyes at those just as hard as you do, but this is more real. There is more utility from this in terms of shedding cross-border fees, in terms of settling payments more quickly, in terms of shedding interchange costs for some parties and having fewer mouths to feed on transactions. There are levels of efficiency gains that can be enjoyed from switching to stablecoins, and all these companies are going to need to figure out how to have a piece of that. And you're seeing people sniffing out who has the best chance of having a big piece of that, and maybe Circle, maybe Coinbase, and those have been kind of going crazy. Circle is an issuer of a stable coin. USDC, I think, is the acronym, and Coinbase has the network, the base network that it's being distributed on top of through platforms like Shopify and eBay, and new partners that they're currently in discussions with. But quickly moving, a lot of disruption happening. It's so funny to draw parallels between this and autonomous driving, because it's Toyota, Ford, GM. You guys can be a part of this, but you're going to need to figure out how to force your way into being a part of this. And I think Visa and MasterCard's path to being part of this is probably a little less friction packed and a little more clear. But same boat for them.
I read Anthony Noto's thing, and honestly, for a company that people say has no innovation, essentially what he's saying here is that the Genius Act is designed to help the companies that are slow to innovate, and that he thinks it's BS, and it should allow for faster moving, innovative companies to offer the same products that big banks are benefiting from, which is like, actually being able to offer interest-bearing, stable coins rather than only the big banks that have all the money to be able to benefit from it. So for a company that doesn't innovate fast, as a lot of people say, it's a very innovation-forward message that he's putting out. But overall, it's really nothing too crazy. That's all.
Yeah, I asked ChatGPT to summarize it. And it's kind of saying something similar, so good job. One thing that I do want to say though on that, on what Brad was saying, is it's kind of making me think as about crypto, and I've had some thoughts about like, is this going to be this new whole ecosystem of companies, or is it going to be additive into the companies that exist? And we'll see. But I think the point being is that not only has the pace of innovation picked up, but there are multiple areas being innovated, and these things don't just like 1 + 1 = 2. A lot of the times it's 1 + 1 = 3. And a lot of these kind of areas of innovation in payments, which I think is a little bit less than AI and real world tech or whatever. But I think it's another example where there's just so many different areas where all these companies are going to get benefits from, increased margin. There's a very large pie up for grabs. Who's going to get it? I don't know. But, when you're feeling the long term, I don't see how you're not confident.
If you're using ChatGPT to summarize 8 tweets, it's a wrap.
That's 2025. Listen, this guy is behind. He's stuck into 2020.
I think there's some truth to that comment.
No, I'm digging in. I'm finding more about Guzzle Elephant.
I remember
like who he watches.
I remember whenever Andy Jassy put out his long message or whatever that he put for Amazon on what they're working on for AI. So I summarized it as a tweet, and then I saw someone on my summary say, "Hey, Grok, can you summarize this?" And I'm like, "This is a summary." I don't.
You've taken this too far. And Gemini has given me answers that are like 4 paragraphs. I'm like, give this to me in 1 paragraph, please. Like, damn, I'm getting way too lazy, and I need to take a step back from this stuff. So
no more filler words. Just give me, the exact only necessary words in this sentence.
Yeah. Well, sometimes you'll be like, here's a paragraph.
Gemini. I didn't know if you were gonna let it do it. I was just showing you. Listen, great channel. He looks like he's a fan of the old days. Great guy.
You'll give Gemini like a yes or no question. Is what I just said 100% accurate, or is anything wrong with it? And it will give you an essay of everything, and then at the bottom it'll be like, yep, that's accurate. And then so I've just started saying in a yes or no answer, is there anything wrong with this? Yes or no. So that's been helpful.
Okay, so do we want to wrap there?
Sure. Yeah, over an hour. That was a good one.
Perfect. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Make sure you follow all the gentlemen on X, YouTube, whatever platforms that they find themselves on. Brad, especially on his newsletter. Evan, his newsletter, which you can find in your email.
Cool newsletter. Great newsletter. Can I say something though before we end it? I want to say, go. We do so much content out there for free. We just want to inform people. But both Brad and Tanner, they do a lot of stuff that also like, hey, this is their full-time job. You got to be able to make money from it, and they're going to continuously make this great content. I know on YouTube there's ad revenue, but I go check out the links in both these guys' bios. I would love to hear you guys talk more a little bit about it. But I know there's a lot of great services and a lot of like free stuff, and even just some great services that you guys use that you have affiliate links for there. So definitely go in, support these guys as you're seeing the space. If you enjoyed Brad, if you're on Tanner's channel, go give him a follow if you stay in there. But these guys put out a lot of content every single day, and I think sometimes you just end the stream or whatever here when I want to hear more about the awesome stuff that you got that's making you money. Turn this into a business if we could do that.
Probably, yeah, and in the future, happy to. Probably gonna grab some dinner. I think at this juncture.
Tell me more though, Brad. What's on the newsletter? Tell me about this newsletter. I know you also update your stock portfolio on there.
Yeah. So I'll take it from the top. I'll take it from the top. I read a newsletter about I think 42 stocks at this point. So earnings reviews, investor days, review it all, and that's what I'm using to build my own portfolio and to update subscribers in real time on how things are changing. 2.5 years in, it's gone pretty darn well, but I don't think I'm going to start patting myself on the back until it's 10 years in, and that outperformance is still there. So good start, but long way to go.
I make YouTube videos.
Tell me more though. What's this product? I go in there. There is futureinvesting.pro, and then I go in and there's a video. And Tanner's face, no mustache.
I don't know. This makes me feel uncomfortable. Yeah, I have a similar sort of situation. I've got a course where I talk about how I break down my growth investing style and sort of base it on the likes of the greats like Peter Lynch or I don't know. You're putting me on the spot here.
Yeah, Evan, how about you tell us how great you are?
Yeah, for people who want that sort of content, they'll find it. But for the most part, I like to shout out the YouTube. That's for the 99 percenters.
There's a comment. You guys have any take on Google? I would go to one of the 2 episodes ago or the episode before. I think that almost the entire thing was on that one. On Tanner's wonderful YouTube page.
We good to wrap?
Yeah, unless Evan has any more random questions that can take us another 20 minutes. Then
if you want me to ask, I am curious on the difference between the newsletter versus more of like the website format of it, but we don't have to dig in. I just want to say, hey, listen, these guys do a lot of great stuff for free. Follow them. But if you spend your whole life, make all your investment decisions off of what Brad or Tanner are saying, you probably shouldn't do that. But you definitely should be signing up for their paid areas if that's where your mind's at. Now, hopefully they're going to tell you don't do that, and you shouldn't. But I mean, these guys have great stuff, put out great content, and it's worth paying for when you guys are making sorry for the language, it's the end of the show, so you're a fan if you're here when you're making a fuck ton of money from it, especially when we're in a bull market. So yeah, I appreciate you guys. We're good to end it.
Appreciate you too, Evan.
Thanks, Evan. Bye, guys.
See ya.